What's up, baby? It's wet outside. You know what I'm saying? Hey, pause. We got a nor'easter from, I don't know. We're in Massachusetts and the weather gets bad sometimes. I don't know if you can see out my little window there. But it's raining like a motherfucker. You know how much I love the rain. So we're going to do a little, we're not doing replay today. We're looking back at the days that I traded. I started marking on my calendar, get a desk calendar. I started marking on my calendar the days that I actually, that I replay or look at the charts. So this week I looked at Tuesday and today, most of today. Just do it because I'm busy. I forget. I skip it, and then I still want to go back. I still want to replay it. That's valuable information. That's data that I don't know about. Okay, that's experience that you can be gaining through the power of technology. Okay, so just keep track of that stuff. But let's just keep it simple today. We're just gonna go over the shit that I took. Today was not good. I did have one day where I had three winners. That was Tuesday, May 18th. May 18th was a Sunday, boy.
We're looking.
Okay, well, we're about to find out. But so I started tracking my trades in here. I'm not going to go over all this. But what I think I'm going to do is fuck P&L. Forget the P&L. Forget the risk to reward. We just need the ratio, okay? But kind of what's in here is really just, and this is me. I was thinking about this today while I was like taking a shit at work. I was like, because if you're familiar with Fat Cat, if you're not, go check out his channel. He's really great. He does a lot of in-depth stuff. He's experienced, but he's all about journaling and about logging and having a journaling system. And one of the things he says is don't optimize towards P&L. That's not a great KPI, in trading, because yeah, of course we're all in it for the money. We want to make the most money possible. But why would you take a trade why would you design your system around making $100, around making $500 a day? I know people have profit targets. I think it's good to know when to stop, but I think you should know when to stop more like, I don't know, if I won 3 times today or if I lost twice today. Not around, I made $1,000. You could follow your rules and make $2,000. You could follow your rules and lose $1,000. Are you going to keep trading until you make $1,000? So, and you should be data driven with all that shit, man. This is data stuff. But this is what I started doing in Google Slides, just because I wanted the visual. Excel is dope for like crunching numbers, but I just wanted the visual. I can still log kind of my notes, how confident I was, what I like about the trade, what I didn't like about the trade, why was I kind of hesitant. Yeah, so I think this is great. I think you need to log your trades. You need to see what it looked like, and yeah, this risk reward stuff, I think I'm going to get rid of this and just do the actual, do the ratio like I did here, because that's also making me R to R, the actual ratio and the number and the win rate. That's way more important than this was 24.75. This was 16.50. That doesn't tell you anything about this trade. This could have been 240.75. It would not make a difference on how I take this trade, because at the end of the day too, if you're talking about points, you can just scale up and down. You should be scaling up and down. If you're adding up points at the end of the day, you should have like a scaling system in place to make your risk. So if the most you want to risk, if you have $100 account and you want to risk 1% of the account every trade, then your risk is $1. Then you should have a system in place to lose max $1 in each trade, regardless of what the point value is. So it should just be flat, anyways, right? You're going to scale up, you're going to scale down. But if we're looking at it systematically and trying to log everything, obviously you're not going to risk $1 because you'll never ever take a trade. But yeah. By the way, I'm a little sick. This is like a Thai kind of. It looks like I'm like doing, drugs or something. But it's a Thai. It's like, you ever use Vicks Vapor Rub or like Bengay? It's like that. It's like, but you just wave it under your nose, you sniff, and then it kind of clears you up a little bit. It's really good. It's good for talking about trading. I think they put fentanyl in here or something. But okay, let's actually do the video now. Sorry. I'm just excited. I just feel good. I'm just manifesting wealth and fortune and happiness. Okay, so I don't make this too long either. So yesterday, we had been in a big uptrend. I'm not going to go through like the whole higher time. You know how to draw higher time frame zones and stuff at this point. It's the same as having smaller time frame zones. Open was right at 9:30. Okay. So at 9:30, we were consolidating. This was kind of a little move down, and it tapped this zone that I drew out a few times. And that, so it tapped it a few times. It did like wick higher, but it didn't close up there. And then pushed down, and that made me think that this was a good short right here. I didn't take this one. And I think it might have been a POC too at that point. If not, then it was. So after that, you could have taken a 1-to-1 on that one easy. Obviously, it didn't go lower, so that was not a trend continuation. That was another kind of reason to. There's your 1-to-1 right there, nice and easy. Love it. But you notice how it comes down to like where the. Also, I'm not redrawing all the volume. You should, but like I'm just kind of going off memory and stuff. And what I'm looking at now, is at the bottom of this target, which is right here. It was just stopping when it didn't reach any more volume. Like it came and wicked down here, but it probably went through where value area low was, and then maybe it hit value area low. So that would have been a good trade. Did not take that one. I took this one and failed. And looking at it now, the obvious thing is that this was like an uptrend. So this formed here. This was a huge push up. And I had been thinking like, okay, this high didn't break that high. This high didn't break that high. This could be the high from this demand zone, but you bounced pretty hard out of this demand zone. You can see that it was respecting the channel. And again, there's no volume down here. So it actually kind of looks like it's reversing up to, not that I would take this green candle long because of the bearishness, but it's also not bearish enough to keep going down. If this candle had broken this low, that means we're exploring new low volume areas. We come back up, get a little more liquidity, and then maybe that's when we go down. But that's not what happened. We didn't find any volume below here or below here. So and then I took a little short. At this point, should have been really. I think I was kind of not sure about taking shorts, but it was starting to really look like a uptrend. So this one right here. So this kind of evened me out. I had, again, shouldn't be keeping score. So I'm gonna not do that. But this came up to this. The short that I marked out kind of formed its own, not amazing, but it formed a supply zone. And this was definitely risky. This could have not worked out, honestly. I waited for this third candle to enter, but just enough for a 1-to-1. Yeah. And then, yeah, you're like, at that point, I was like, okay, definitely 3 higher lows. We're reversing. We're in uptrend. I didn't take this, but.
And look,
And I'm always, even with these crazy wicks, I'm always weary about a body that, in this case, a red body. And if you were in this trade, you really would have been sweating for a little bit. 11:56. So it would have taken you an hour in this trade. But why I would be confident about this trade is bouncing off of value area low. This is also not a good zone, really. And initially I had just drawn that zone and it broke through the bottom. So if you're using this zone, because this is the good zone, if you're using this zone, you could look at it as like kind of a liquidity grab. That's why I think we wick below it. But, I think on NASDAQ, sometimes you can be a little wonky with your zones and your strict rules about did it break it, did it not, This one broke that zone head. But, this was consolidation. So it poked into consolidation, didn't break the low. Took a while to get higher. And this is the funny thing too, is that if you look at that. You see that? So maybe take it at POC /VWAP. That would probably be the smart thing. I want to start looking at things, looking at my targets, because sometimes I take a 1-to-1 by default. But by putting in these things here, I'm like, where could I have targeted higher? Can I target higher? Should I have targeted higher? I think these aren't great examples because these are kind of like exploring new territory. But if there was a big fat volume node up here. No, sorry. There's a big fat volume node up here where this dropped down from. Maybe I target that instead of that and get 1 to 1.5 or 1 to 2. That's how you kind of start building a little bit of cushion, The other thing is if you really think it is going to continue, you can target your high. And I take post-op picks too, because look at how fucking crazy that looks. It just eventually if I had let my shit run, it just eventually blasts through. That's not my strategy. I would have a runner if I had more capital. And maybe I will have a runner and just have like a 1 MNQ run. But that's besides the point. The point is you want to be aware of your R to R and where you're targeting. Is there a big fat volume gap at 1 to 0.5? Are you risking a 1-to-1 by default, but there's something in the way of that 1-to-1? Something in the way. But the reason I say that is because, that's exactly what I'm talking about here. Is that this was just by default a 1-to-1, but VWAP is here. POC was here. It's not that much of a hit on your risk. So you're really, it's like, just take it a view, but like a little bit ahead of VWAP. Like just choke up a little bit. If you're worried about it, if you're worried about the 1-to-1 thing and being really strict about that, choke the stop up to the candle. Choke it up to the value area low. So like if we're using volume profile to structure our risk, let's use it to structure our risk, and reward. Here was another one. I marked this, but this was a bad. No, I'm not marking that. This was a bad zone, and this you could be bouncing down from value area high, and from POC and from VWAP. So no. What was this?
And look.
Oh yeah, this was crazy. Oh, this one doesn't count. This was a tip from my boss. He said I had already drawn this out, and we had a call at like 3:30. So I felt proud that I had marked out a zone that he called out as an important area. And he said if it bounces down from 435, it's probably going to go down. And I will be transparent. Initially, I kind of got excited and started to take something here. But then I was like, no. It actually might have just hit the stop there. But if it did, you could have gotten back in here. Like when it hard rejected up here. Not. Is this a zone? Is this not a zone? I don't know. But it kind of is. But that worked out. But I'm not counting that as a thing. That worked out for a while, actually. Okay. Let's look at. Let's just freaking zoom through this, my guy. This was today. This was my big fat losses today. Right at the open. Maybe don't trade it open. I don't know. Nice fake out. Like, what was I seeing? I was seeing this be bullish. But I was kind of thinking we were turning into a macro downtrend. So I saw this big supply zone, and I was like, okay, we're bouncing off the midline. Let's take this short. But we were also bouncing off the bottom of the 1801 channel and off of this kind of others, not great zone, but pre-market zone. I don't know if this was value area low at that time. But I think the bounce here, and if you kind of zoom out, it looks like it was like bouncing out of the channel, came back, retested it, and then doing one of these. It doesn't look like if it was going to go down, maybe it would have done one of these, and we would just miss the boat. So, yeah, not great. You probably could have just taken that green candle alone, honestly. My second L was kind of a FOMO trade to get back into. Like, I missed the bull bounce, whatever. It's going to keep going up. So I was like, and I hadn't been paying attention to this bottom channel. So I was like, well, now it's going to bounce off the top of the top channel. It did not. So, yeah. And then I was like, you know what? I'm not doing great. I gotta go to the office. I'm gonna stay out of it. And just looking now at what happened afterwards, this could have been a good. Well, No, I don't think this was a good entry because this price action up here where I got kind of cooked. This is not decisive price action. We've looked at this, talked about this in a couple of videos ago. What does the price action look like above the zone that you're trying to enter on? Oh yeah, and it really just turned into like a
And look,
consolidation day. I mean, this consolidation while I was in the trade like should be a bad sign. I'm just trying to. That looks like it might have faked people out. I mean, this like, do you take that? No, I don't think so. Volume. I don't know what's going on with volume. Just don't take it if you're not sure. Yeah, you could. I mean, you could have taken a couple of kind of risky trades, but like, I don't really. I don't love anything. If price action is just not clear, just forget it.
and look,
You're not clear on pricing. If you long this, you would have gotten lucky. It looks like it's not the worst entry. It's like decent demand zone. This is actually not bad. Decent demand zone. You're like making higher highs and lows. This is the only area I'd be worried about. And then down here. But obviously either news or just like a huge trap. I don't know. But that's not the worst. I wouldn't fault you for taking that. And that's 4 o'clock. So maybe that's why you don't take it, because it's 15 minutes from the close. Or 30 minutes, whatever. But yeah. This has gone on long enough, boys. Enjoy your storm. Aha.